The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. And I mean, it's not like it's important. It's April the 1st, and for many, many, many people, we're going to close up tax season April the 18th. We know that the federal government must have looked at Buffalo, 8 feet of snow. It must be a catastrophe there. So we're going to give them another month. But the state of New York says, oh, no, not so fast. We know there's nothing wrong with you guys down there out there in Buffalo. So we say April the 18th. So that's the conundrum, right? Anyway, I'm Esther Gulius, the tax lady from EG Tax. You can go to our website at egtax.com. We have 32 area offices to serve you. I'm here to serve you, and so is Chris Fabian. Hello, Christopher.
Hello, Esther.
I did it first.
Yes, you did.
I did it first. All right, and we're going to talk taxes. Going back to what happened this week, which we were so thrilled about. Weren't we thrilled about it?
I was ready to go play in traffic.
I'll tell you. So the deadline, according to the IRS, for every place else in the world is April the 18th. However, for us people living in the frozen north that had a blizzard, they have extended it till May the 15th. Now, what we're going to do, but the state of New York has not followed suit. So that would mean that if you're going to take advantage of that extra 30-day deadline from the federal government, you have to file an extension with New York State to pay your liability because they're not playing that game. So the federal government, May the 15th, the state of New York, April the 18th. And so you'd have to file. If you're not going to file, you got to make sure you file the extension for New York State. And any projected liability, 90% of it, has to be paid in with the extension.
Yep. And it's going to be so much fun.
Yes.
People
right.
are going to be so confused. They're not going to know what to do.
Anyway, I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can hear my voice is coming back ever so slightly. It's hard to get over the frog that lives in my throat when I have to talk all day.
Right? Oh, this cold was not fun. Not fun at all. But you're sounding much better.
I do sound better. Okay, so one of the things I want to talk about today is how to handle children that live with you who are not your own. Flesh and blood, right? They're not adopted, they're not yours. And so a lot of times people think, well, I have my girlfriend living at the house. She has her children. Can I claim the children on the tax return? I'm the one maintaining the household, and I'd like the $2,000 child tax credit. Is that how it works, Chris?
No. They have to be your children. I mean, in order to get the $2,000, they have to be your children or placed there by the courts.
Right.
You had to adopt the children. So if you're just living with your girlfriend or boyfriend and it's their kids and you want to claim them, it doesn't work that way.
Right. Now,
You only get...
You will still get the $500 credit because these people are still dependent upon you. So if the girlfriend's not working and she has children living in the house, right?
Yep.
And you're supporting the children and her, then yes, you can claim them all, but you're not going to get that $2,000 child tax credit. You only get the dependent credit.
Right, and you don't get EIC.
Right, you don't get the earned income credit because they are not your children.
Right.
So yesterday, just last night, I had a client that says he's going to get married. His girlfriend lives with him and her daughter. And how come I don't get a big refund? And I said, because you'd only get $500 for the kid. The girlfriend's on her own. She was self-employed. And he didn't get much of a refund. Yesterday he came in. They got married. Aha! That changes everything because now this becomes this becomes your stepchild.
Right.
So you have a legal position, and so he got to be married filing joint. He got to claim the girl as a dependent, get the $2,000. His new wife went to college full time, and she spent $11,000 on a graduate degree. So then he got $2,000 with that. Anyway, he got a $10,000 refund. He said, he gave me a blank check. He says, just write what you want, Esther. And I said, I didn't do anything. I just did the law. I don't want to write a blank check. But anyway, I wanted to talk about that because so many people don't understand why you can't get the child tax credit for children that aren't your children.
Right.
Because they aren't your children.
Yep. You refuse to say those two words. I do.
Right, I do. Okay, I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 in the cell phone. You can text us at 716-8030930. And we got Pete from Hamburg. Hey, Mr. Pete, how can we help you?
Yes, I have a question. I filed my taxes, filed already. I e-filed them already.
Sure.
I owe on the federal. I have a refund, small refund on the state. So now, seeing that they're already filed already, do I have until May 15th to pay the what I owe on the federal, or do I have to pay it by the April 18th?
Did you, when you did the return, indicate to the Internal Revenue Service that you wanted the money to come out of your checking account on April the 18th?
I usually.
Or are you going to mail them a check?
I always have a check mailed to me, but like I said,
Right,
I owe on the federal.
Then he has the right to wait till May the 15th. Yep.
Okay, so I can
However,
wait.
for anybody else listening that did it electronically and was going to have their balance due taken out electronically, and you put it in because nobody knew, right? I mean, it was like, hello, we had no idea this was going to happen. If you or your tax accountant put in that you want the money to be taken out April the 18th, guess what's going to happen? They're going to take it out April the 18th because nobody cares that
3 counties.
Right. That the 5 counties actually have an extension. So if your return filed electronically said you wanted your refund, your balance due to come out April the 15th, it's coming out April the 15th.
Okay, so if I didn't do that, if I just always
You're
just get a
good,
check,
Pete.
I got to the 15th of May to pay it then.
Yes, sir.
Thank you very much.
All right, thank you. The other thing I want to make sure is people understand is that you have to live in those counties. You have to live in Erie, Niagara, I think, or Genesee, and St. Lawrence, and another one far out east by Watertown, someplace. Anyway, and in order to take advantage of that extension. Want to also talk about, again, 8030930, 8030930, star 930 in a cell phone. How many out there really know about when your Social Security is taxed? A lot of people say to me, I don't understand the whole thing about how much money can I make before I can collect Social Security, da-da-da-da-da-da. And so really you got to take it in 2 separate parts, don't you? First of all, if you're collecting Social Security when you're at, let's say, age 62, prior to turning 66, that's where that $21,000 in wages come in.
Right. Yeah, people get confused with the payback of Social Security and then the paying of taxes on Social Security.
Right. So the payback of Social Security is if you're you started taking Social Security early, before age 66. And so if that's the case, then they say, okay, you have to pay us back $1 for every $2 you earn over $21,240. Okay? But if your wages are under $21,240, then you don't have to pay back any of your Social Security. Now, that has nothing to do with the taxability of the Social Security, right?
Right. The taxability of Social Security is you take all your income plus half of your Social Security, and if you're single, if that total is over $25,000, then your Social Security starts to become taxable. If you're a married couple, then it's $32,000 is the figure it has to be over to have your Social Security start to become taxable.
Right. So there's like this mystery. Now, once you're 66, regular retirement age, let's say you start collecting your Social Security and you make $75,000. Do you have to pay any of that back?
You don't pay any of it back, but
will
you,
your Social Security be taxable?
yep.
Because it's over half of it added to your other income, or your income is more than 32,000, and so it starts to be half taxable.
Right, up to 85%. The
Right.
max is 85%.
So that's why it's so important that you know what you're doing, because you want to make sure that you don't have to pay it back if you're working. But once you're at regular retirement age, you can earn whatever you want.
Correct.
Right?
Yep.
All right, I'm Esther Gulius, the tax lady from EG Tax. We're going to take a short break. 8030930, 8030930, star 930 on a cell phone, and we'll see you on the other side.
We are family. I got all my sisters with me.
Hey, everybody, we are family. I'm Esther Gulius, the tax lady from EG Tax. We got offices all over. We want to help you. I mean, let's face it, you got, for the regular tax season, you got 17 days left. And if you're going to take advantage of the blizzard extension on the federal, you'll have till May the 15th. The state of New York says no dice. We got an email to that effect, right, Chris?
Right. They said, I've been researching, and I can't find anywhere on their website. Yeah, because they're still saying no.
I think Kathy Hochul knows that everything's good here in Western New York. I mean, it's a blessing to be able to not have to pay your federal liability. The sad part is all these thousands of returns that we've done with balanced dues, we said, take it out April the 18th. I mean, it's going to happen.
Yep.
And I know you're sad, but there's nothing you can do about
Right.
it.
And I know we called a couple politicians locally, and one said, well, I think New York State's not doing it to make money, because how much money are they going to make on penalties and interest for people who file after April 18th?
Well, there you go. That's true. Because if you owe money, you gotta do the extension.
Yep.
Okay, I'm Esther Gulius, the tax lady from EG Tax. By the way, at some point in time in the show, I want to look at the 1099 forms that you're getting from your broker, and I want to demystify that. Yesterday, I had a client that handed me the brokerage statement, kind of like it was a poison apple, and they just dropped it on my desk, and they said, I don't understand this, but I thought, we'll talk about that. So get out your brokerage statement so we can talk about it. But in the meantime, we're going to talk to Mike in Tonawanda. Hey, Mike, how can we help you?
Hi, Esther. I have a question. You mentioned about the federal being changed to May 15th. Does that affect any previous years? Like if you have not filed a 2021 tax?
I would say no.
And anyway, you're already late.
Well, no. If you have a refund,
Right,
like
okay.
for 2019, which expires April 15th.
But he said 2021.
I know, but I'm just saying that would be the only one that's really the
Right.
deadline.
Only that the statute of limitations would have to be extended then too. But on 2021, you're already late. And if you got a refund, they don't care because they'll keep your money all day long.
Okay, thank you.
All right, thanks, Mike. And let's go to Jim. Hey, Jim, how can we help you, sir?
Yeah, hi, Esther. I got a question. You were talking about Social Security. I'm thinking about retiring at age 62.
Okay.
I've got numerous real estate that I collect revenue from that. Would that, you were stating before, like $20,000, you can't make more than that. But would that
But
be
not-
applicable?
But, Mike, I'm going to make your day. Rental properties are considered passive income. That's not earned income. It's got to be wages or self-employment. Rental is not self-employment. So you can make $1 million on your rentals and still collect Social Security at age 62.
So this is good news and a good call I just made.
Absolutely.
Thank you very much, Esther.
You're very welcome.
Take care.
Thanks for calling. I'm Esther Gulius, the tax lady from EG Tax, 8030930. That was Jim. I'm sorry. I think I called him Mike. 8030930, 8030930, star 930 on a cell phone. Okay, you wanted to say
I was
something?
just going to say, with rental properties, we do have a lot of clients that have a lot of rental, and they have lived off rental properties. But like you said, that doesn't count as earned income. which that means you're not paying into Social Security. So if you don't have a job and you just bought rental properties, you're not building up Social Security.
That's why you need, if you're a single person, to get married to somebody who's been in the Social Security system.
So you could feed
because
off
you'll
of-
get half of theirs
Or you incorporate
and pay yourself a
and
salary.
pay your salary for managing the rental
Right,
properties.
Right, that's true. Very good. See how smart Chris is. I'm Esther Gilius, the tax lady. 8030930, 8030930, star 930 on a cell phone, and you can text us at 716-8030930. All right, I wanted to go back, kind of backpedal. We were talking about kids living with, and everybody lives with everybody anymore, right? Back in the olden day, if I said to my dad I wanted to live with somebody, I'm going to tell
You would got thrown down the stairs.
I think I would have got thrown down the stairs. Anyway, a lot of people think that that's how they get to be head of the household too, if they're single, right?
Yep.
So if you have your girlfriend and your girlfriend's kids living at your house, and you think, well, I'm maintaining the household, that's not how it works, is it? It has to be a qualifying relative.
Right, right.
And a girlfriend and her children are relatives of themselves, but not of you.
Correct. There has to be a blood kin.
Right.
A blood
So,
relationship.
In order to be head of the household, you have to maintain a household for a qualifying relative, which in this case wouldn't be. So I wanted to talk about that too. All right. So I hope you have pulled out your little brokerage statements. And so I wanted to go over it and kind of demystify. Now, that 1099 form that comes from your broker has usually lots of sheets in between behind it, which makes it so intimidating. But the first part is kind of a summary. It's like the brokerage wrote you a summary of what's taxable.
Yeah, the
right?
consolidated form that
Right.
has the 1099 DIV, the 1099 INT, and the 1099 B as in boy.
Right. And so what you have to do when you're looking at your brokerage statement, you want to take it line by line. And the first part that I thought it would address would be ordinary dividends and qualifying dividends. Why should anybody even care, Chris?
Well, because regular dividends are taxed as ordinary income,
Just like wages.
just like wages. Qualifying dividends, which are included in that ordinary dividend figure, are taxed.
Sometimes.
Well, no, your qualified dividends are always part of your
Well,
ordinary
that's
dividends.
True. That's true. But it isn't necessarily
all of it. Right. But I don't want to say you
Okay, you're
you
right,
record
you're
it
right, you're right,
twice.
you're right.
So if you have qualifying dividends, they get the preferred capital gains rate.
And so when people say, oh, no, I have to pay capital gains, they really don't understand what they're talking about, do they? Because
No.
capital gains are taxed at much, much less than regular.
Yeah, it
Income.
could be 0%,
Right.
15%, or 20% if
Right.
you're in the top
Right.
bracket.
So when you have qualifying dividends, basically when I look at that, I think, they're going to pay less taxes,
Right.
right?
Yes.
Okay, I'm Esther Gilius, the tax lady. 8030930, 8030930, star 930 on a cell phone. Okay, so what? Okay, so then moving across on usually that same line, that dividend line, is usually something. Many times, if you're in a mutual fund, capital gain dividends. What does that mean?
Right. Your capital gain distributions that's not you buying and selling stock. That's the mutual fund holder buying and selling stock themselves to try to have that fund make money. So that's your share of the gains of the mutual fund buying and selling all day long, all year long.
Right. So just like the qualifying dividends are taxed at the lower rate, so are capital gain dividends,
Correct.
right?
Yep.
And they all should, and if you're somebody, especially if you're do-it-yourselfer, you would understand to get that special tax treatment, you have to do the computation on the Schedule D.
Yep. Use the Schedule D tax worksheet.
Right. Okay. So Then the next part would be something called 1250 dividends. So that would mean for collectibles,
Yeah.
right? So if that mutual fund was buying and selling collectibles, you're going to pay at a higher rate. Now that's not the preferential rate, but that's a higher rate of taxes.
That's
that you're gonna pay.
28%.
Right, right. Then moving down the line, there could be something called exempt interest, which is really important for New Yorkers. Why?
Right. Well, you got to go through the exempt interest because that means it's federally tax free. It has the potential of being New York tax free, but that's when you have to go through that 40-page package and see where that tax exempt interest comes from. Because if it's from within New York State, it's tax free on New York.
Right.
If it's from anywhere else, it's an add back to
Right.
New York.
So when you're doing your New York return, let's say you had tax exempt interest of $1,000, it would be tax exempt federally. But then you go through that packet and you find out that that was all in Missouri. Well, then when you do your New York return, you have to add back in that favorable tax treatment that you got on the federal on the New York state return because they are going to look for that money from you later with penalty and interest.
Yes. Yes.
Okay, I'm Esther Golias, the tax lady. I hope we're not boring you. We want to make sure you're smarter than the average bear. From EG Tax, 8030930, 8030930, star 930 in a cell phone. You can text us at 716-8030930. We're going to take a short break for the news. See you on the other side.
We are family. I got all my sisters.
Hey, I'm Esther Golias, the tax lady from EG Tax. Thankful that you guys are listening to us. We were talking about your brokerage statement and wanted to cover a couple other things. 8030930, 8030930, star 930 in a cell phone. There's also, as you move across that brokerage statement, something that is called a 1116.
Well, yeah, but I'm just looking at your list. Regular interest. I mean, if I'm trying
just
to think,
interest.
is it Merrill Lynch, Wells Fargo? Some of them, you have to turn the page over
That's right, to find it.
to find the interest.
Yep.
And I'm thinking there's a lot of interest missed on tax returns.
Well, which means they're going to get letters.
You'll get a letter. So you got to be careful. You got to flip the pages and look at the pages.
Those summary sheets are not necessarily easy to read, but that's why I wanted to go over them. Interest, and then the 199A deduction. That is something to save you money.
Right. That's the QBI and,
Qualified business income.
Right. It doesn't mean you own a business. It means you're invested in a business.
Right.
And that's what some of these mutual funds are, or REITs. A lot of these ones are REITs, which is rental properties. So they qualify for this QBI, and that's what that 199A is, where you have to do the 89.95, and then you get a 20% adjustment
Right.
to income on that figure. So
Right.
if that's $1,000,
$200.
$200 comes off your AGI.
Right.
So, I mean, even if you're in, we'll keep it simple, the 10% bracket, that's
$20.
$20
Right.
in your pocket.
Right. And then moving on, the 1116, that's a foreign tax credit. And that's a dollar for dollar money in your pocket. So this whole thing, and then after that, they deal with the sale of stock, right?
Yep.
So when you take a look at that summary sheet, it might show your total sales, and they might say it's A stock, B stock, D stock, or E stock, and that just means that the stockbroker sold it and covered it, which means that we're saying we know what the cost basis
Right.
is.
That's A and D. Is A is short term, D is long term, and that means the basis was kept by the broker.
Right. And that's why they call it covered. I don't understand why they couldn't have just said, we know what the basis is, but they called it covered. And uncovered means that they're not guaranteeing the basis.
Right. This is what we have, but it's not 100. It's not 100% true and accurate, possibly.
Right. And then the other, then when you put this thing all together, If you have a gain, that gain, if it's a long-term gain, is going to be taxed preferentially. You're going to save money. If it's a short-term gain, it's going to be taxed just like ordinary income. If you have losses, though, that loss is limited to, after they net everything on the Schedule D, to $3,000 against other income, and the balance is carried forward.
Correct.
So I wanted to let people know how to read those things.
Yeah, yeah. And
I mean, sometimes people have they have no idea what's happening in their investments.
right, right. And the what we were saying earlier, the capital gain distributions that's up top on the DIV get reported on the Schedule D. So if you have stock losses that you actually sold stock on, that will offset those capital gain distributions.
Right.
So that all ties together.
Right.
And I know we're trying to make it sound simpler, and we're going to confuse people
Well,
even more.
I mean, I thought we did a good job explaining.
Yes, yes.
Anyway, I'm Esther Gullis, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We have a text here.
We do. It says, I'm hiding in my bomb shelter. No kidding. I have a lot of transactions on a 1099B. Can I attach it and put the summary amount on the 8949 instead of entering all of them? Yes. Yes, you want to do it by each category, the A, B, D, E, has to have their own 8949. And then you do attach your summary sheets to that. So yes, they can do that.
Right. So much for tax simplification, right? Okay, let's see. Okay, I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. All right, tax planning for 2023. You want to make sure that you are understanding that the energy credits actually are expanded for 2023.
Yes, yes.
But you're looking, okay.
No.
The energy credits are basically 30% of energy conservation for your home, or if you do something that's called clean energy. If you do those things in 2023, you can actually save up to $3,200 in taxes.
Right, and the lifetime limit is gone. So if you already did windows,
You can do 'em again.
You can do them again.
Right, right. All right, and then let's say your stockbroker charged you $10,000. You can't write that off anymore, right, Chris?
On the federal, you can't.
But on
On New York, you can.
Right. And that's where I think a lot of people are missing the boat as well. It is true that the miscellaneous itemized deduction on the federal return has dried up, right? But all of those things they took away, the state of New York says, come on, you can still take them. So that would be your brokerage fee. So if you're paying your stockbroker, that would be something that you'd put as miscellaneous deduction on the schedule.
On the 196.
The 196 on New York State.
Yes, yes. You know, and guess what? That's somewhere in that 40-page booklet too.
Right at usually it's the very last thing is what the broker is charging you for over and above for managing your portfolio.
Yes. Yep. So, and you know what? And in 2024 is the last year of the Trump cuts, the tax cuts. So no one knows for
What's gonna
2025
really happen.
are they going to bring back the miscellaneous itemized deductions?
I think they should. I'm going to tell you the $10,000 limitation with New York State is just crazy.
Yeah, the
It's
property
just-
taxes.
It is just crazy.
Yep.
So, but let's talk about New York State itemizing. So medical. So all right. Well, here's the thing. The standard deduction on the state of New York is on married filing a joint return is $16,050. But on the federal, it's a lot more than that.
It's 24,000, almost
Right.
25.
And if you're a senior, it's even more.
Yep.
Right. If you're single, it's 8,000. So that bar to get to in order to itemize on the state of New York, plus the fact that they are going to allow you a lot of deductions that you can't take on the federal. Like, for instance, if you're a trucker
Yep.
and you're an over-the-road trucker, it used to be that they would allow you to take those expenses as a miscellaneous itemized deduction. You can't on the federal anymore, but you can on New York State.
Right. Union dues.
Right.
That's a big one.
Professional dues, the brokerage fees, tax preparation fees, your medical. And the other thing I think people miss on medical is the long-term care insurance,
Yes.
because that's a deduction on the federal, but a credit on New York State.
Right. And it's a carry forward credit.
Right.
So if you don't use it all, the amount what's not used goes ahead to next year, and it keeps going and going and going until you need it.
Right.
So
So if you're paying long-term care insurance, you, even though you may not be able to itemize on the federal, you want to make sure that you put that on the New York State return so that you get full benefit for that credit.
Right. And, speaking of New York itemized deductions, I know I had somebody this week that was very much a heavy gambler. In the federal, you get to deduct your gambling losses up to your winnings. But what does New York do with itemized deductions?
They limit 'em.
They limit it. So if you're a heavy...
If you're wealthy, they limit it.
Right,
They
like
don't
I believe
limit
it's
it.
around 300 to 350.
Right.
They start limiting it. But what that means, this person had $600,000 worth of wins. So his itemized deduction zeroed out. So he had to take the standard deduction. So there was a balance due to the feds of $25,000. And he's like, but I lost all my money. How is this possible? Well, that's what New York does. So you got to be careful. We always tell people be careful because it goes on page 1 of the 1040 as
And you
other
make your
income.
Social Security
Makes your
taxable.
Social Security taxable and all that. But on New York, they get rid of your losses after a while.
Yep.
So you be prepared to pay New York if you're a heavy gambler.
Right. So I want to give an example. And again, I'm Esther Gillius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. So let's say that you had a mortgage interest of taxes of $12,000, mortgage interest of $6,000, charities of $1,000, employee business expenses, which aren't allowable on the federal, of $3,000. You would have $22,000 in itemized deductions on the state of New York, and that's a lot of savings because that's so much more than the standard deduction.
Correct.
Right?
Yep.
Okay, the other thing is, what if you earn money outside of New York?
Well, you got to pay tax in that state, and then New York will give you a credit for the taxes you paid to the other state because they want their share of the money, but they're not going to double tax you. So if it's North Carolina, you have to do a non-resident North Carolina. You pay that tax, then you get a credit on New York for that tax.
Right, so
But-
you use the Form 112R.
Yep.
And that's where you report the taxes paid to another jurisdiction. The entire amount of income, though, is completely taxable to New York State again,
Yes.
but you get that credit
But you get
to
the
offset
credit.
it.
Right. So if you happen to work in Texas or Florida for
There
a
ain't-
little
There
bit,
ain't no credits there.
there's no credit because you didn't pay a tax.
It was interesting because yesterday I was talking to Chris, our receptionist, and I was saying to him, we have to get the signature file, and he said, well, where's the Florida signature file? I said, there is no Florida signature file. And he said, why? And I said, because there are no taxes in Florida. And he said, there's no taxes in Florida? That's right, there's no income taxes in Florida.
Correct.
Right.
Correct. Yeah.
Anyway, we're going to take a short break. I'm Esther Gillius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We don't have a lot of time left, and we want to help. Talk to you on the other side.
We are family.
Hey, I'm Esther Gillius, the tax lady from EG Tax. We have not too many days left in the regular season, and we will help you. We're open 9 to 9 Monday through Friday, 9 to 5 on Saturday. And if you just can't get your act together and you need extensions, we certainly, because we got the extra time on the federal, the extra month, we will help you with your extensions with New York State. But realize an extension is not good unless you pay the liability that you have projected at the time of the extension.
Right. You gotta pay that money then because
Right.
otherwise they can penalize you.
Right, absolutely. Let's go to Mark. Hey, Mark, how can we help you, sir?
Yes, hi, thank you. Got a question about something that my employer's been deducting for the last couple of years. New York family leave. It's about 1/2 of 1%. It's listed as a tax, so it's deducted the same way federal and state withholding Social Security tax is. Am I able to take that back as a credit, either on the federal or the state level?
No.
Okay. And is it
Unfortunately, sorry.
And the interesting thing is,
Yeah.
which is really interesting to me, is when you collect, it's taxable.
Right. That's, I mean,
So,
it's
and
insurance,
I
in other
don't
words.
understand
right?
the logic of the whole thing, because normally, if you're paying taxes on something, when you start to collect, it wouldn't be taxable. But the Family Leave Act is taxable to you, and you don't have to pay FICA on it, of course. But
is that required
unfortunately,
of-
there's no deduction.
Is that required of all New York employers? Because I'm looking at my daughter's pay stub. She's a public school teacher, and they don't seem to be taking something out of her check like that.
It should. They may not just list it, but yes, for any employer, they have to take it out because it's a New York law.
And that's public employees as well as private?
As far as I'm aware of, I can double check and let you know next weekend.
Yeah. All right. Very good. That's
Thanks,
it.
Mark.
Thank you.
Thanks for the
All right.
call.
Yep.
Okay, and Nick, how can we help you, sir?
Oh.
Hello, Nick.
Did you, Nick? This is Nick. Yeah. Hey, I have okay. So what I did was I filed my 22 taxes, 2022, and I got a refund. And during the course of that filing, I noticed that in 2021, I made a mistake and I did not deduct my my pension and annuity, of which I was allowed to. So
You mean on the
I
state?
filed. Yeah. Pardon?
Okay. On the state.
So I filed. Yeah, I filed IT 201X.
Right.
And mailed it in. And about a week ago, I received a form letter, and they said that I have to refile my Farmers 217 form. And okay, so and it was in reference to the 2022 tax forms.
Okay. Well, first of all, you need to amend your 2021 return and take. How old are you, Nick?
93.
Okay. So, did you have a tax liability in New York State?
Oh yeah, I'm in New York State and I live in.
Yeah, but it
Collins.
doesn't mean you have a liability. You actually owe New York State taxes.
No. I filed and I made the mistake, and I paid. So it cost me $400.
Okay, so
And
when
so
you
I-
amend your 21 return, you're going to get a refund of the subtraction you didn't take. Okay, so that's
No,
number
no,
one.
listen.
Number two,
No,
if
listen.
the form.
Wait, let him talk. What?
Yeah.
Go ahead.
You're not listening. I did. When I noticed the mistake, I got an IT 201X to amend my 2021 filing. In response to that, about a month later, I received a form letter. And in the form letter, it told me I had to refile my Farmers 217 form, and it was in reference to filing for school tax refund for the farmer.
Right, but you said that was for tax year 2022. They wanted it, right?
Yeah, no, that's what they have referenced up there.
All right, so you're mixing up your
Well,
years.
New York State might be mixing it up, or you might have used a 2022
201X.
201X, and that's what's confusing
no.
it instead of using a 2021 201X.
Well, here's the problem.
Here's the bottom line,
I don't-
Nick.
I didn't
and
think I
it is
did.
you need somebody to help you. Our offices are nearby. Go in, and we will unscramble the eggs for you.
What's the closest office?
I don't know where's Collins. I don't know where Collins is. Hamburg, I think,
God.
right?
I'll go. Huh? Well, you have an office in
Hamburg, Fredonia, right?
Or are you by East Aurora?
No, Hamburg would be the closest.
Hamburg.
We have,
I would go see Colleen in the McKinley Mall.
There you go. This way,
Colleen?
Nick, we can look
Yes,
at everything.
Colleen.
Over the radio, you can't really tell. So go in, we'll help you.
Okay, that's Colleen in the McKinley Mall.
Right.
You have a sign there somewhere, I assume.
We
yes,
sure
we're
do.
we're by the old food court.
Okay. Okie dokie. All right.
All right, Nick, be careful going there.
Incidentally.
Thanks for calling.
Incidentally.
All right, Roger, how can we help you?
Good afternoon. Thanks for taking the call. I'm wondering, my wife and I are 88 years old and want to know if we have to continue paying our taxes every year, about filing for that.
All right.
Our adjusted gross income last year for 2022.
What form of income do you have, Roger?
Pardon?
What form of income do you have?
Just some pension and Social Security.
How much pension?
Probably about 19,700.
19,700. You have 19,700 pension and Social Security, right?
Right.
Okay.
Is that the 19.7 between you and your wife?
Yes.
Okay. Just want to make sure.
Okay. And your Social Security is like how much a month?
Monthly, I don't know, but last year it was 30,746.
Okay, so that's 15. All right. So here's the thing: are they taking any taxes out of that pension?
No.
You don't have to file.
Yeah, the federal, you don't have to file. Do you own a home?
Condominium.
Okay. How much are your property taxes?
Probably under 1,000. I don't know, 700 maybe.
Okay, because, and I'll tell you where we're going with this, is possibly we were thinking that he could get the New York 229, but it sounds like you shouldn't qualify for the 229, and you don't have any federal obligation. So as long as there's no withholding, you can drop out of the tax system. Now, if you start taking more money out of your IRA, or if you come up with some fresh type of income, you can call us. We'll let you know if you have to file.
Okay. Are you talking about not annuities, but savings accounts and stuff of that nature?
No, not a savings account. It would
Okay.
have to be something that's taxable.
Anything reported on your tax return.
Right.
Okay.
Okay, Roger?
I appreciate it very much. Thank you.
Thank you, sir. Have a great day. I'm Esther Gullius, the tax lady from EG Tax. Another want to talk about this, and again, you can go to our website, ask the tax lady. You can email me, and I'll write you back. If you find yourself owing money, don't forget to avail yourself of the traditional IRA. And if you're self-employed, you can put money into a simplified employee pension. That will actually save you a lot of money. I had a gentleman this morning who was self-employed, and just by putting money into his IRA, he cut his tax bill by $1,500, and he was thrilled.
Right,
you know?
right. And it's his money.
And it's his money.
Right? It's not the government's money, it's his money. He's just moving it from pot A to pot B.
And the other thing is, if you find this year that you had maybe not a pleasant experience, you found out you owed a lot of money, or your refund was less than you normally expect, take a look at your pension plan at work and your withholding. Take advantage of your 401k at work, your 403b, especially if you have a matching contribution from your employer. If you don't get in your plan, and number one, it reduces your taxable income. Number two, they do the match. You're actually throwing away money.
Right. And, a lot of things too is the new W-4 is so confusing.
Hello.
People are used to doing, I'm married and claiming 3.
Right.
There is no more such thing as married and 3.
Yep.
You have to do the worksheets and the chart and,
And when you do that, it's so precise, they basically underwithhold.
Yep.
And so, because it doesn't take into consideration a lot of those other things. And the other last thing before we go is, if you're somebody that's on New York State of Health and you find out that when you're filing your return that you underclaimed your income and they gave you too much of a subsidy and you have to pay it back, make sure you contact New York State of Health to have that changed right away, because you don't want to keep owing a bunch of taxes because of that subsidy.
Right, right. Yeah, that subsidy, it goes by year-round income. So if you lost your job in June, you still have to say you had income from January through, that income counts towards your subsidy. So what you think going forward, you may get this huge subsidy, but when you do your tax return, the reconciliation, it's going to look at your year-round income.
Right, and make sure that if you are on New York State of Health with a subsidy, you put that on your tax return. Otherwise, you're going to get a letter and a bill, and that's not good. So anyway, I'm Esther Gullius, the tax lady. Visit us, any of our offices to serve you. Go to our website at egtax.com. Thank you for listening. I hope we helped you a little bit with the Schedule D. Thank you, Chris, and we'll be back next Saturday. Have a great week. God bless. Bye-bye.